Good afternoon, everyone. My name is Andrea Hill, and I'm the Outreach Librarian at the Riverhead Free Library. The Riverhead Free Library is committed to helping entrepreneurs and job seekers find the information and opportunities they need to thrive. So for more information on our services, you can give us a call or visit our website, and the link and the phone number can be found in the chat. With that said, thank you for joining us for today's virtual workshop, Small Business Access to Capital, and I'll now turn it over to our presenters.
Thank you, Andrea. Hello, everyone. Thank you for joining us this afternoon. My name is Gifty from the Stony Brook Small Business Development Center. I'm here today with my colleague, Leslie Rara, who is also on the program right now. We are going to present on, let me give you my topic here, small business access to capital. Okay, so we'll talk a little bit about who we are and what we do. So we are located at the Stony Brook University. We are at the Research and Development Park. The SBDC is funded by the SBA and SUNY, that's the State University of New York. So what do? We offer support services to small businesses. We offer referrals to consultants and services. So if you have a need, we have consultants that we work with, be they lenders or other contacts, we could send you to them to sort of assist you speed up your loan process or whatever information you may be looking for. We also offer workshops, seminars, wide range of topics. So we do business startups, we do business expansion, we assist new businesses, even if it's just an idea that you want to sort of promote and build it up to an actual existing business. We assist you with that. So startup assistance, business expansion, we assist with business plan development, financial projections, marketing, a wide range of topics, franchising, technology and even innovation, and all the good things, federal procurement, MWB certification, and quite a number of services. So our agenda today really would be to focus on small business access to capital. So we'll start with establishing the importance of establishing business credit, access to capital, the various funding options, what you would need, right? If you want to apply for a loan, what documents they would be looking for, how the lender actually evaluates your application. Then we'll talk about a few SBA financing programs and some others I have listed as well. So let's get started today. Why is it important to establish business credit? It plays a really critical role in funding for your business. So it's important to maintain good personal and business credit history, not just personal business credit history as well. So we have a few agencies I listed out here that could be instrumental in assisting you. We have the Consumer Financial Protection Bureau. They may be able to provide helpful tips to people with limited credit, right? As a startup, if you don't have much credit, they could help you get credit histories started. Now, Federal Trade Commission also has recommendations for improving credit. So these are all government agencies that could, assist you get started. It's also important to register for Dun & Bradstreet number. That's the DUNS number. It's a unique 9-digit identification number for every fiscal location of your business. So Dun & Bradstreet, they provide valuable information, research, data, insights, analytics on small businesses, and they will be able to assist you and guide you on how to establish business credit. They provide information on your business so that lenders and other, parties who are interested in doing business with you have access to that information. They're able to make informed decisions, right, about whether they should do business with you or not. You know, so it's always good to have that profile there in Dun & Bradstreet. For example, the SAM Award, which is a federal procurement system, right, system award management, they will require that you get a Dun & Bradstreet number to begin, right, the registration process in SAM. So Dun & Bradstreet is quite a useful you know, agency. Get a DUNS number and see how best you can build your business credit. So access to capital. Now, the condition of your business and personal credit, like we said before, and I'll keep saying it throughout, is very important because it reflects your ability to repay debts. We know the score ranges from 300 to 850. And these are the agencies. We have Experian, Equifax, and TransUnion that keep track on credit ratings and credit scores. So 300, of course, being the lowest, and 850 being the highest. So you could see from the smiley faces here where you should try and be if you want to apply for you know, business credit, business loan, apply for funding, whatever it may be. 300 is very low, so this person doesn't look that happy. We get here 680, that's average, you're getting there, then good, 720, 760, and flawless, of course, is 800, which is really up there. But you can figure out what a good score would be. The banks wouldn't say, oh, every bank is different. Let me put it that way. They have their preferences. We can't give a specific number, but you got to try and, you know, reach that goal of having good credit. Now, how long have you been in business? That also plays a role, right? A new business will definitely have fewer options because they don't have the history. They don't have much to show for. Everything would probably be based on projections. So the length of time you've been in business is quite important, but that doesn't mean you won't get any money. It means it could be challenging, right? So there are a few things that we're going to talk about to see what the options would be for both startups and, you know, existing businesses.
Excuse me, Gifty, before
yes.
you go much further, we have a question from Deirdre. She wants to know, is the DUNS number the same as an FIN? I thought an FIN is the same as the EIN, the employee ID number, but I wasn't sure.
Right, it is a different number. That is issued by the IRS. That's employment identification number. It's an ID number for your business. Dun & Bradstreet is different relating to your performance, right? If you have good credit or not. It has nothing to do with the EIN number. That is to do with, you know, something different. It's an identification number for your business, nothing related to your credit or business credit or anything like that. So these are two separate numbers. We could talk more, you know, if you want to know. Most banks, really, you must have an EIN number if you want to open a business bank account. If you're filing taxes, if you're registered with the state, you must have an EIN number. It's totally different, nothing to do with what we're talking about today. But we could go in depth, you know, privately if you want more explanation on that. But it's like Leslie said, the employer identification number. Okay. So access to capital, all businesses need capital to grow. Definitely, without money, you can't move ahead and do what you need to do. So we have to sort of try and figure out the right funding source, depending on the developmental stage of your business, depending on where you are in the life cycle of your business. So there are some things you got to first consider, right? Why do you want to borrow? What do you want to use the money for? Does the project make business sense? Right? We have to make sure we have done our research. We have to make sure we I'm not sure how to go back here. Okay, 1 second. Does the business make sense, right? What you're proposing, does the project make sense? Is it achievable? Is this something that you have done research on? Is this something that you have made sure there is a need for, right? Is there a market for it? Who's your target market? How much are you going to sell it for? Are you going to have any net profits? When do you break even? All that. So you have to make sure that the business sense is there if you want funding for this project. How much money do you need? We have a few people that would say, I want to do this, I want to do that, but have no idea what they need. You need to know what your startup cost would be, or you need to know what it would take for this project to take off ground. So that also needs to be considered when you are trying to ask to borrow money, because the lender would want to know every possible thing that they need to know about their business. Will you qualify for a business loan? That's very important. You have to make sure you do have the credit, something decent, something good, right? You have to check your credit score, make sure you have everything in place before you try to apply for a loan. What is the cost of borrowing? We have to do our homework, figure out interest, estimated interest rate. Some people charge origination fees, administrative fees, and all these fees that are involved. You have to figure out, right, the repayment terms. Is it suitable for you? 5-year loan, 10-year loan, 15-year loan? What can you afford, basically? So that's the next question. Can the business afford the loan? And there is a loan payment that you have to consider. Are you able to afford it? What are the loan payments going to be? Is it reasonable? And we can help you with all that if you want to, sort of do a pre-assessment before you go in there to the lender. How will the business use the funds? Specifically, what do you need the funding for? Because the lender would want to know how much you're going to spend on the equipment or raw material, working capital, operating expenses. What do you need to use the money for? And how will the loan be repaid? So these are some of the questions that we need to ask ourselves and consider before we try to actually go in for a loan. So it could be a loan, it could be a line of credit. There's so many options, and we'll talk about that as we go along. So we have here finding the right financing option and lender, right? So we have SBA guaranteed loans, and we're going to spend quite a bit of time on that towards the end of the presentation, because most businesses that we, most people we speak with generally are in that initial stage, or even if they are existing businesses, but find that SBA guaranteed loan very attractive because it's got some good points to it. We have bank loans, we have non-bank lenders, lines of credit, credit cards, microloans, little loans that might be sufficient for certain businesses. There's peer-to-peer lending, and there could be lending solely for equipment, even in leasing of equipment, all kinds of financing options. We have bootstrapping, and bootstrapping may be very relevant to most small businesses, particularly in the beginning. And then also we have crowdfunding. Okay, so what do we need to be aware of? We need to look at our business financials. It's very obvious, right? A business with solid financials will definitely attract better loan terms in terms of how long the loan would be, in terms of what the interest rate would be, in terms of all the items that you may need to submit for the loan to be approved. New or struggling businesses may have less favorable loan terms and may have to consider alternative funding options. The traditional commercial bank may not be, the suitable place for certain startups. You may want to have to consider alternative funding options. Okay, so what are the collateral conditions? So what is collateral, right? The lender would want to accept some form of asset as security for the loan. It could be equipment, it could be real estate, accounts receivable, personal property, but a form of collateral, right, for the business. I know with the SBA, if the loan is up to 25, under 25,000, no collateral is required. But if it goes up, there may be a requirement for collateral. Up to loans over 350,000, then they would want to have the entire loan collateralized. So it could be different percentages depending on the bank. They would require certain things. Some don't put it as collateral. It could be a lien, a blanket lien on some property that you have, meaning you can dispose of the property, you can sell the property until the business is, so the loan is paid off. So if you want to call it that way, but there could be a blanket lien, and that would be accepted as security for the loan. There is also what we call personal guarantee, meaning you become personally responsible if the business is not able to repay the debt. So these are some of the requirements that a lender may ask for. You have to make sure you're comfortable with these requirements as well. So we will talk about the different stages, right, of businesses and the type of funding options that may be more readily available to them. We have startups. So new business hasn't started yet or is less than 2 years old. Most businesses under 2 years old are considered startups. So with this type of business, funding options are not that many, right? We have limited funding options. Most people may try to do self-funding for themselves, also known as bootstrapping. So bootstrapping is when you use as little money as you have to do as much as can be done, right, with that money. It's sweat equity. You're trying to pull resources from everywhere. You can turn to friends and family for capital, but we also have to make sure we're able to honor our end of the bargain, because you don't want to sort of strain relationships. We have savings accounts, we have crowdfunding. So there's so many other ways, but I listed a few here. On exceptional basis, though, new businesses may qualify for a small business loan, meaning good credit, good business plan, and some things that the bank may be open to looking at. Normally, we would approach a CDFIs as well for a small business loan if, you meet all their requirements. So a business plan for a startup, definitely, if you want to get a loan, would be required. Financial projections as well would be required. You can also consider a line of credit, right? A line of credit might be a good way to also access funding for your business, as well as getting a business credit card. So that is it. That is what we have here for startups. If you have a growing business, you've started your business, it's relatively new, you're 2 years, less than 2 years old, but you haven't actually attained profitability yet, because it is not easy to just be profitable right away. It takes quite a bit of time when you are growing your business to actually make real profits. So there are other forms of lending that you may want to consider. We have alternative forms of lending, meaning going through the CDFI financing, right? Or credit union. Some also offer that, or considering the SBA guaranteed loan through a bank. We also have online lending as an option. So online lending, they may not focus so much on probably this credit score, but they may be interested in maybe cash flow and things like that. They may be sort of a bit lenient, but the cost of borrowing certainly would most likely be higher than would be offered from the conventional, loan sources such as a traditional commercial bank. So the third stage, of course, would be a stable business that has, that equity, built up enough equity, is demonstrating a solid financial performance, it's got a history of profitability, it's got tax returns for some years, so they are able to show that history. They have that sales traction that the lender is looking for. So, and also they have established a customer base, and they have vendor relationships and all that. So such businesses definitely would go to a conventional bank. The big banks, they have better access to loan terms, right? So they have favorable loan terms, interest rates. So as a startup or as a growing business, you may not have the best loan terms or interest rates, but it's a start somehow. You try to bootstrap, use all your own resources. If it doesn't work and you must seek funding, just be aware that the rates may not be as favorable as if you were a stable business, but it could be different depending on every situation is sort of different. There's no one blanket rule for all businesses. So other sources of funding that a stable business could also make use of: line of credit, term loans, asset-based loans, and more. So these are the different funding options that are available to businesses depending on the life cycle of the business, where they are at. So as I said initially, for startups, it may be important that you create a solid business plan. So when you start a business, it's always good to have some kind of a roadmap, right? Where are you headed to? How are you going to achieve your goals? So all that would be stated in a business plan. If you have a good business plan, then you are better prepared, let's put it that way. So you explain the industry in which you want to compete in. So you do your market research, you know about that particular industry, who the players are in the industry, what your target market is, what are you trying to provide, what service, what goods, is there a need for that? So these are some of the things that would go in a business plan. You talk about your marketing strategy, you talk about the competition, you talk about management, you talk about operations, you talk about, what you would be, what your timetable is, right? When you hope to achieve your goals. So you outline the specific business goals and objectives and how you plan to meet these goals. All these things would be in the business plan, not forgetting financial projections. Financial projections are very important because any lender at all, and even for you starting your business, you would want to know what your projections are. So we have 3 financial statements that most lenders will be looking for in a business plan. So we have your profit and loss statement, just showing how profitable you're expecting your business to be, because these are projections. These are for new businesses. We have a balance sheet, which gives a snapshot of your business at a particular point in time. And then we also have cash flow statement, meaning cash, how much comes in and how much goes out over a period of time, most likely over a month. So these are some of the financial statements that would be required in a business plan, and we definitely would be willing to assist if you want to complete a business plan, so you know what to expect in month 1, month 2, where are you going to be in the first year, and things like that. It's just trying to have a good estimate of how your business is going to move ahead, what your goals are, and how soon you can achieve those goals. All that would be explained in a business plan if it's required for your loan application. Okay, so what financial information do I need to include? We have tax returns, definitely. So if you don't have business tax returns, you'll be required to also give personal tax returns, interim income statements, balance sheets. If you have existing loans, they want to know about it. And as I spoke earlier on, they would want to see the projections, normally over a 3-year period. They would also want to know what your net worth is. So just to summarize everything, what documents do I need for my loan request? Right. So as we summarized it, tax returns, personal tax returns. If you're a business that is new, of course, there's no existing business tax returns, so we don't have to worry about that, but you need to submit personal tax returns. What business debts do you have? If you have a business plan, if it's a new business, definitely you'd have to submit that. Financial statements. If you have a lease, that's if you are going to be leasing a place. If it's a new business, don't sign anything yet, of course. If you have a draft lease, that would be acceptable. Incorporation paperwork for your business, DBA registration, if applicable, proof of collateral. It may be required depending on how much funding you are looking for, and also any other business licenses and permits and things like that. Okay, so we are going to try and look through the lens of a lender, right? So if a lender wants to look at the business loan application, these are some of the things that they will be focusing on. So they'll be looking at the strengths of the business, right? What is the business doing? How it's doing it? What is the performance of the business? Do they have any, exceptional traits? What is the market in which you are operating? They're going to want to see financials as well, financial information, just as we said before, all those financial statements or projections and things like that. They want to know the environment in which you're operating and if the business has any good, points there. Why do you need to borrow? They would want to know every single thing about your request, right? So is your loan request reasonable? You would have to explain what you want to use the money for, line by line. All line items would be required. How are you going to generate cash flow? Is the business going to profit from doing this project, or your reason for borrowing the money? How is the business going to generate enough cash flow to repay the loan? That is very critical as well. Personal credit, we talked about that before. Definitely, it's very important. So we need to make sure we start working on our credit before we actually go out there to apply, because it reflects on your ability to borrow the money and pay it back. So the lender will also look at cash flow, very important. And the cash flow, if you have tax returns, that would be your profit, the business net income, net operating income, plus the interest payments, plus the depreciation, plus the amortization. That would give you your total cash flow. And then the lender is going to look at the debt service. Do you have any new debt? The debt that you are, requesting right now, plus the existing debt that you have. So they're going to look at the monthly payments of what the new debt is going to be, the monthly payment for what the existing debt would be, multiplied by 12, and that would be your debt, schedule. That would be your debt service. So we have the total cash flow, then we have the debt service. We divide the cash flow by the debt service to determine what our debt service coverage ratio would be. That is how the lender is going to look at your loan application to see if you are able to cover the loan. So we'll give an example. So if you have a net operating income of, say, $6,500, right? The debt service, you add it all together, it's, say, $5,000. So $6,500, that's the cash flow, divided by the debt service of $5,000, you would come up with 1.3. So 1.3 would be good, because the minimum of 1.25 is what most banks will be looking at. It means for every dollar, right, the business will have 25% more cash flow. They don't want you to extend yourself and not have enough. If it's below 1, it means you're going to stretch it. You wouldn't have any cash flow available to serve as a buffer. So this is the minimum of 1.25 is what most banks require. But once again, it's not a fixed number, right? Depending on the circumstances, depending on what you can show. If you have strong projections, maybe the bank or the lender may be more flexible and may accept a lower ratio. It all depends on the underwriting of the business, but it's just a guide, right? So the debt service coverage ratio becomes important. What your cash flow is, what your debt service is, and if you're going to be able to service the debt. So we have here, keep pressing this. We have here, this is just something, we have the 5 C's of credit. I'm sure you've heard about it. So in a nutshell, right, what would determine available credit that would be likely for your business to attain? So it's the capacity to repay. It's the 5 C's. The first thing is capacity to repay. The lender wants to know exactly how you plan to repay the loan. Capital investment, how much money you and your team are personally willing to invest, right? So is it 10%, 20%? Depends on who you're dealing with, but you should be able to have something to invest. Or you could have invested the money already. You have to let the bank know. You have to keep all your paperwork to say, this is how much I have invested in the business, and it could count towards your capital investment. Collateral, we said before, additional security that you are able to provide, because some lenders, most lenders, may want some form of collateral. And then the conditions, what the money is being used for. Are you using it for working capital? Is it for equipment? Is it for inventory? You need to really make sure you have it all sort of written out and know specifically what you need the funding for. The lender will also consider the economic climate. So it's not just a one size fits all. It depends, and sometimes they may be more lenient if they're looking to make loans, or sometimes depending on the economic climate, it is what it is and they have their rules. The character also, it's very important, right? So the general impression you make on the lender is important. You have to, appear knowledgeable about what you are asking for. That's very important. So this is subjective, right? Your experience, your education, your personality, credibility, worthiness, the quality of your references. It just could be even how you present your case. If it's not really well thought out, well planned, if you don't have all the pieces, all the information, all the estimates, if you don't have, all your I's dotted, then that could be a drawback, and you may have to work on that as well. So in a nutshell, that's the 5 C's of credit. But that doesn't cover everything. It's just some of the things you need to be aware of. Okay, so we're going to talk about some SBA financing programs. The popular, most commonly used SBA financing programs. We have the 7A guaranteed loan program. We have the 504 loan program, and then we also have the microloan program. We're going to talk about each of them briefly. I'm aware of the time, so I will make it fast. So the 7A guarantee loan, as I said before, is the premier signature loan program. Most people use that. It can be used to fund just about anything, long and short-term working capital. You can refinance your current business debt, purchase equipment, fixtures, supplies. So it has a wide range of uses. Okay, so most commercial banks and some credit unions offer this option. It has flexible terms, and it also is used where otherwise you wouldn't be able to receive funding. Now, the SBA doesn't make loans directly. It guarantees the loan for you. So the commercial banker feels it's less risky if they have that SBA guaranteed loan. So let's look at the process, how it works. Business applies to the lender. Okay. Then the lender will apply to the SBA for that guarantee. So the lender goes and services the loan. Then the SBA pays guarantee in event of default. So it sort of minimizes the risk for the lender, element of risk for the lender. So SBA may provide up to 90% of guarantee, right? So it depends on how much. The guarantee could be 90, could be 85, could be 75, but the fact that the SBA is guaranteeing the loan for the lender makes it a bit more attractive, right? Because that element of risk is reduced. There are certain lenders also be able to move it faster. We also have what we call the 504, is more for long-term needs, or construct a building, buy large equipment, or things like that. So this is for long-term financing of up to 5 million for major fixed assets. As usual, if it's SBA loans, the terms are pretty good, up to 25 years, low down payment. And these are available through what we call the certified development companies. These are regulated by the SBA, these companies. And then we have also the microloan program. So microloan, as the name suggests, it provides up to 50,000 for immediate financing. Depending on the size of the loan, it may be good to just go for a microloan. The average microloan is about 13,000, and the SBA provides funds to specially designated intermediary lenders, and these are non-profit community-based organizations. They administer these microloan programs. So these are different SBA programs out there that your business may want to take a look at depending on their need. So microloan, the microloan program provides funding for these uses: working capital, be it inventory, supplies, furniture, fixtures, machinery, equipment. So it's got a wide range of uses that you could use their funding for. So another interesting option is crowdfunding. So crowdfunding is where we have a large number of people sharing their social, creative, and financial capital within a limited time window towards a project or a cause. Many people giving to your project, so you are collecting funding from a wide range of people called crowdfunders to support your cause, to help you, support you financially, right? It could be for reward, it could be for equity, there's so many different types of crowdfunding. But you got to be very careful. You should know what you're doing and what it involves, because there are a lot of regulations, a lot of fine prints. Both also have to be aware of financial and legal obligations as well. So that's another way to raise funds. So you have an idea, right? Then you create a campaign, right? And then, or a funding page, you share the news, you collect donations, you must have a funding goal. There are so many regulations. Some may allow you to collect the money within a certain period of time. For others, you got to wait for a period of time. So there are different ways, but the general idea is raising funds from many people using crowdfunding. So the different types, we have those who want it for equity, those who just want to reward you, just donate to you, and you would just probably give them, if you're creating t-shirts or a mug or some artistic piece, you're going to provide them with a sample for a reward. They're happy with that. Others, so reward and donation, then we have equity and lending. So different types of crowdfunding exist. Those who want financial return in return for their money they're giving you, and there are others who have non-monetary rewards. They are just trying to support you for your cause and for your business. That's a fun fact here. Women-led campaigns raise more dollars than men. So that's an interesting fact there for crowdfunding. So certain platforms, because of course you've got to go to a platform to launch your campaign, and we have these different platforms. There's much more, but these are some of the most well-known ones. We have Indiegogo, Kickstarter, GoFundMe, this and that. So many platforms. But bear in mind, they also have a fee to host you on their platform. So these are some of the ways to raise funding. I know, of course, there are grants out there, private grants out there. That's also another way, but it's not easy to find. You'd have to research depending on the industry, depending on your cause, and things like that. So those are certain things to bear in mind as well. We have some government programs, right? We have some government programs that are still ongoing. We have the New York Small Business Recovery Grant Program that is also ongoing. This is for small businesses or micro businesses, for-profit, independent arts and cultural organizations. We're calling them eligible applicants who are currently viable and began operation before March 1st, 2019, and are still running, right? Still in operation. They may want to look at this grant program from New York State to see if they're eligible for any grants, right? They can consult with us, the Small Business Development Center, of course, at no cost, to see if your application is filled right, to see if you have everything done accurately. And the website for this program is the New York Small Business Recovery.com website. You can get all the information about this particular grant that is ongoing right now to see if you would be eligible. You must show certain there's certain eligibility requirements. You should show that your business and a certain number is certain amount, right? And you should show loss in revenue. Say from 2019, 2020, you have to compare and show a loss of about 25% or so in income. So there are certain eligibility requirements. It's all laid out here. If you have any further questions, we'll definitely be willing to assist you with that. These are some of our, support services here. We have the SBDCs, which is ourselves, and we have other centers as well that you may want to reach out to if you have any questions. And this is our contact number we offer. As I said before, we have free help. We provide confidential assistance at the SBDC, and that's our number up there. I'm not sure if Leslie is on, and if Leslie, we have any questions or anything.
Well, Leslie's definitely on. I've just been working behind the scenes. Some of you, if any of you have been on full screen while you're watching this, then you are not able to see the chat box.
Right.
I keep forgetting to say that at the very beginning. I have been putting explanations of some of the things that Gifty has been saying into the chat box.
Perfect.
If you don't have a way to see it, like you were viewing this on your cell phone, for instance, when I send you your follow-up email, let me know that you'd like to see what the comments are and that sort of thing, because Zoom will send them to me and I can send them to you.